Hi, good evening, and welcome to the second in a six-part series of Homebuyer Education Program brought to you by the Schuylkill Valley Chapter of Credit Unions. I'm Trish Shermot. I represent just one of the 14 credit unions that belong to the Schuylkill Valley Chapter, and we're here tonight to present the second session of six. We did present one about 2 weeks ago. With me are two local experts that are going to help dive deep into credit and spending tonight. So I'll have them introduce themselves, and then we'll get started. Bob, you want to introduce yourself, please?
Oh, thanks, Trish. Thanks for having me again. Hi, everybody. I'm Bob Zwolinski. I'm the financial education coach for Sun Federal Credit Union. And I've been in the mortgage industry for 25 years, so I'm glad you're here to join us tonight. I hope to share some good tips with you, and stay with us throughout the whole program.
Linda?
Good evening. My name is Linda Kleinsmith. I've been in lending for over 25 years. That's consumer and mortgages. And I'm here to help you understand the importance of your credit score and credit reports.
Thank you. We'll get started right away. With our last session, we went into spending and how to look for homes in different neighborhoods. If you missed that session, I know that you can go to bctv.org and you can find it on their website to get caught up. Also, your local credit union would have some information for you if you want to look at what we've done in the past. Tonight we're going to talk a little bit about buying power, again more on shoring up your spending, looking at your spending, and then we're really going to take a great look into your credit report, which I'm very excited about because there's a lot of great information there. We're also going to look at the 4 C's and how to have those in place, and our resident experts here will give you some tips and tricks that they've seen with their history in the lending industry. Where we left off last time, we were talking about shoring up your spending. So we're going to look at how to track it. We're going to talk a little bit about identifying spending leaks, how to develop a spending plan or a budget. We're going to also talk about income and expenses. We'll continue to talk about that, I think, through the whole series of 6 sessions that we do. We're going to look at establishing emergency savings and how to control debt. And before we get too much into debt, let's talk about tracking our spending a little bit. And I know that Bob has some great tips. He talks to so many people in the community, so he said he would share some stories of things that he's heard. Bob?
Great, thanks. Well, let's look at ways to track your spending. You know, most of the debts are pretty easy. We've got rent or car, you know, gasoline, insurances. The big debts are easy to find, and when you look at your paycheck, you see how much you're bringing home. It's easy to identify what I have to go ahead and pay, but when you look what's left over and you say, gee, where to go? That's the hard part. That's the part we've got to go ahead and check. So an easy thing would be just to get a little, you know, I'd say a little notebook and maybe a pencil. Keep track on a daily basis. Look what you're spending, where the money's going. Now, if you need some other tips, you can use the smartphones. I'm sure there are apps out there you can go ahead and grab to keep track of all of your spending. Go to your credit union. Check to their websites. They've got some great tools. They've got some good budgeting forms. But they'll go ahead and show you, how to go and keep track of all that money, and you can identify where maybe that can turn into potential savings. So let's look at how much you spend on what we call the little things. That's where it really adds up. If you look at your daily functions or the things you do during the day, what you'll find out is that you might leave in the morning, grab a cup of coffee on the way in, grab some breakfast. You might be $5 right there. But before lunch, you might grab another drink or a snack, and then you have lunch. By the time you're at the end of the day, $20 or more dollars are gone. Add that up across the week, it's $100. Across the month, it's hundreds of dollars. At the end of the year, it could be thousands of dollars. So those little things really do add up, and that's where tracking is going to come in and identify those areas. Okay, let's look at establishing some good credit. The first thing you might want to do is get credit in your own name. If you don't have credit, get it, but obtain it in your own name. I know my credit union, what we do is we have, a credit builder credit card. It's easy to get. It has a low limit, so it's safe. Learn how to use it responsibly. We have, good programs. You can see some videos. We have some other instructions on our websites, show you how to use these things. So when you use the card, you pay them off, and that'll get your credit started. Now, building it's a little bit different because it's not just having one card. You need to have more than one line of credit or one credit card. You really need to go about 2, maybe 3 cards. I wouldn't suggest going out and getting more than that, but you need a couple different cards because that's what it's going to take in order to get eventually to a credit score, which I believe Linda's going to cover. But go ahead and build it. Now, building really is time. Not only do you have the credit cards, but you've got to pay on time each month. That's going to create that great credit history that we're all looking for. The last piece is, filling it in. And when we say fill it in, we're talking about non-traditional sources. So if you're going for a mortgage, okay, you've got your credit report, but one thing all lenders are going to want to look at is, well, how do you pay your rent? That's a good piece or a good indication of how you're going to pay your mortgage. It's very similar. So you want to be able to pay your rent in a way that's verifiable, leaving a paper trail so that you can go ahead and prove for the next, last 6 months to 12 months that you're paying it on time. But one other important thing about establishing good credit, get a good relationship with your credit union. This way you can go ahead, know who's there, you'll get good advice, and also establish a pattern of savings. Savings is just like paying a bill. The only thing is you're paying yourself. Now let's look at your credit report. Here, we'll turn it over to Linda.
So what is in your credit report? Your credit report is a bill payment history, and it stays in place for 10 years or more. Some of the people that would like to see a copy of your credit report are when you go car shopping, the car dealers. We have credit card companies that also would like to see a copy of your credit report. Insurance companies when you go for car insurance. And if you go to apply for rent somewhere, landlords also occasionally will also want to see a copy of your credit report. As well as if you go for a job, employers sometimes ask to see a copy of your credit report. Now you can apply for a copy of your credit report for free one time a year, with each of the 3 major credit bureaus. And they would be, the big 3 major credit bureau agencies are Equifax, Experian, and TransUnion. You can go to those 3 credit bureaus. Equifax.com you can get that online, or you can go to, they have a 1-800 number, as well as Experian. It's Experian.com at an 888 number, and also TransUnion, it's TransUnion.com. So you can visit the 3 credit reporting agencies if you want to contact them by phone or go right online. Your actual credit score, what is it? It's a 3-digit number that lenders use as sort of like a report card. The range is between 300 and 850, 300 being the worst case scenario, and 850 being extremely good. You can actually get a copy of your credit score, which costs an average of $12 to $16 online. Or you can go to your local credit union and they could provide that for you to one of your financial specialists. Anything over a score of 730 is considered good to excellent. The average credit score is around 693. What has an impact on your credit score? First of all, the payment history. That is the #1 point impact, major impact on your credit score. That has a 35% impact on the makeup of your credit score. So it's very important that you pay all your bills on time and never be late more than 30 days. Otherwise, it's going to have a big negative impact on your credit score. The second item that it has on your credit score is the amount that you owe to your creditors. That has a 30% impact on your credit score. So the amount you owe others is going to have an impact. The more you owe, the more it could have a negative impact on your credit score. The next item is the length of your credit history. The longer your credit history, the more positive impact it's going to have on your credit score. Now that has a 15% impact on your score. The next item is new credit. New credit has a 10% impact on your credit score. So if you are getting a lot of new credit, it could have a negative impact on your score. The next item would be types of credit you're currently in use. That has a 10% impact on your credit score. And the question is, do you have a healthy mix with your credit score? Do you have, let's say for example, if you have $100,000 in debt, is that whole $100,000 in debt, is that all credit cards? Or is it a mortgage, a car loan, and credit cards? That's the question you need to ask yourself. You want to make sure you have a healthy mix of credit, a little bit of everything. The next question is, can you take control of your debt? You want to make sure that all your credit is spread out over your credit cards, your car loans, and your mortgages. And we're going to...
Let's talk a little bit more about debt. You know, Linda, that piece of the pie, that was really interesting, all the factors that go into, you know, how your score is affected and how the weighting is affected. And I know Bob was going to talk a little bit about how to look at that from a debt standpoint. Bob, can you tell us a little bit more about, you know, controlling your debt and looking at it from a credit score standpoint?
Sure. You know, I do have an opportunity to sit down with a lot of people, work with them on their credit. One of the biggest surprises that people face is when they're not sure about how much debt they actually owe. And we start adding it up, and you usually get the, you know, that shocked look. They really can't understand like how that happened. And you can see on credit cards, you know, if you have a $1,000 balance, it only costs about $20 a month as a minimum payment. So, you know, just heed the warning. Don't make the minimum payment, pay it off. Don't let those balances build up, because $20 doesn't seem like much for a $1,000, you know, balance, but sooner or later you got 4 cards, $4,000, and your payment's only $80. And you can see how that just kind of snowballs. So know what debt you have so it doesn't get out of control. It's something you should look at, of course, you know, monthly as those bills come in. Look for the warning signs. You know, we hear people talk about their, you know, living paycheck to paycheck. That might be one of the warning signs. Another one may be you're accessing new credit to pay for old credit, something that you have outstanding. That one, I think, would be, you know, very severe. So look for those warning signs. Try to make a savings account if you can to stay away from that. How about decreasing debt? You know, life itself is going to throw a lot of curveballs at you. It's going to cost a lot. Different things will happen. So are we on break now?
You're watching bctv.org. Be informed. Be involved. Be a member. For membership information, go to www.bctv.org/support/membership. For other stories and information, go to bctv.org.
There we go.
Great. So let's go back to decreasing debt. You know, as I was mentioning, life costs a lot, so debt's going to, you know, inevitably be in front of you. So always try to keep that at a minimum. Think about what your base debts are, and that's keeping a roof over your head, you know, having an automobile, keeping, you know, your health care, whatever it may be, but try to keep your debt at a minimum. Now, what happens if you have a problem? Can you get help? We're going to cover a little bit more at the end. We'll give you some names and some numbers and people to contact, etc. But look to get help. There are a lot of good nonprofit agencies out there that are willing to help. They've got great tools. I know each one of the credit unions, if you go in there, we're more than willing to help. We've got people who are experts. We have trusted partners we work with, and you know, they've got the tools in place, different programs. So all you have to do is go ahead and ask. So let's look about what happens though if you get to the point of can't pay your bills. Well, don't ignore your creditors. Give them a call. Let them know, you know, let them know what's happening. You know, bad things happen to good people. Stuff happens. So give them a call, let them know, bring them up to date. You might be surprised, you know, they want to work with you as well. They want to get paid. They're going to also extend some sort of help. Call your local credit union. Of course, that's always a good resource. We're here. We have tools. We've been doing this for a long time. We may have things you may not think of. Just again, we can't say enough. Ask for help. Now, as far as Sun Federal, we use GreenPath. You know, they're a trusted nonprofit agency that we work with. They work everything in preventative foreclosure, bankruptcy counseling. We do a lot of debt management programs where you can go ahead and consolidate all of your credit cards, maybe eliminate some of the fees or lower the interest rates, make it a very affordable payment where within about 5 years or less, you're going to be debt-free. And that's the nice thing about, be it credit or your debt, you can always rebuild that. It can heal and get better. Now, the one golden rule, though, is don't add any new debt. And that's really a key. And I don't think whether you're buying a home or not, these are just you know, good rules to keep in mind for you know, a good financially fit life.
Thanks, Bob. You know, one of the things that we use and is available to all consumers in Berks County is Money Management International. It used to be the old Consumer Credit Counseling, but it has changed. They have changed their name, and they have a representative that's actually in the offices of CTCE Federal Credit Union at 2101 Center Avenue, and they provide free counseling services to all consumers. So we really encourage people to give them a call. You know, whether you're having a debt management issue or not, it's a great way, kind of like a diet, to find out where your baseline is. Because remember what Linda said, you know, when you can't pay your bills, that's 35% of your credit score. That's weighted pretty heavily. So you want to do what you can to manage any bills that you can't pay, and call your creditors, call your credit union, get help. You know, even if you can just pay a little bit, work something out. People really want to help you. We're going to turn it over to Bob to kind of wrap up the 4 C's, and then we're going to dive into some other resources. Bob?
Great, thanks. You know, that's all good stuff. And one thing I do want to mention, you know, don't wait until you get to the point of where it's a problem. If you see something building up and you're not comfortable, give a call. Be a little bit proactive. Let's look at the 4 C's. You know, one of the things we look at is character. Now, how do we measure that? And that's where Linda touched upon the credit report, because the credit report is going to tell us, how did you pay others? If you've been paying everybody else back on time, month after month, well, that really speaks volumes as for character. That means that the money we're going to lend, we have a good indication we're going to be repaid. How about capacity? Now, capacity is the ability to go ahead and pay your bills. So you have enough money to pay, in this case, not only the new mortgage, but whatever other existing debt that you may bring along, such as a car, student loans, etc. So that capacity is going to be measured. And as we mentioned, a mortgage payment is about 1/3 of your gross monthly income. Now, capital really is the money. What money you're bringing in, what's your investment in that home? It represents your down payment, the closing costs. And let's not forget, I think we talked about all those other costs that you may incur, such as utilities, the moving costs, etc. So you want to make sure you have enough money. Now, last piece is collateral. Not only are you interested in that, we're very interested in that, and that is the value of the home. There we do an appraisal. It's going to give a third-party opinion of what that home is worth, and we're going to use that to determine whether or not that really makes you know, financial soundness, if you will, in purchasing that home, with you putting maybe down 10% and the credit union putting up 90%. So that collateral, of course, is very important.
Well, Bob, it looks like we've gone into a lot of items for people to consider. Are we ready? Do you think they're ready to go out there? How about that checklist?
All right, let's look at that checklist. If you're not ready, you can just go back to the BCTV and replay this. It's a lot of information. Well, let's look if you're ready. First, you need to have a steady job and income. Does it mean you have to have the same job? No, you can change jobs but stay within the same field. We're looking for really a 2-year history. Just have a steady job, steady income. Don't plan to move in the next few years. Why? It's very easy to go ahead and purchase a home, but to sell a home takes time. So if you're not really sure if you want to be in that area, you know, you really have to think long and hard about that particular home, because once you're in it, you should be staying there for some time. Make sure two things. You got your spending under control, and you can afford that new mortgage payment. You know, purchasing a new home, there are going to be things that you want to put inside of the home. You know, that might be furniture, it might be new flooring, curtains, whatever. There's always some other costs. So make sure you keep all of your debts and spending under control. Keep a good eye on that. Good credit history. You know, one of the things as you know, Linda talked about, all these different factors about credit. You know, even if your credit is not stellar at this point, can you repair it? Yes, it heals. So if you're not there yet, work with your credit union. Stop in, talk to the loan officer, get on track. That credit score will get back up to where you need it, and just get it checked, see where you stand. Know how much house you can afford. Purchase a home that is affordable. Think about all the other costs, property taxes. If it's a condominium, you may have other fees involved, maintenance. Just make sure you can afford it, you're comfortable. How about saving for the down payment and closing costs? Make sure you have enough money. Gifts are okay. It's time to go ahead and talk to the parents. If they're going to give you a gift at any time, they can certainly help. If you've been hitting all these checks so far, you're getting close to being able to go ahead and purchase. How about those debts? Know what you owe, because you need to know what you owe in order to go ahead and see how much of a mortgage you can afford. In today's interest rate climate, rates are so low that if you just can free up another $50, that's $10,000 more in purchasing price. That can make a big difference. So if you've hit every point here in the checklist, you may be ready to go out and purchase.
Bob, that's great. And again, it goes back to the whole risk thing with Linda, what she said, and the credit score. And you really want to know what your report card looks like. And if you know what your report card looks like, and you may be a little bit more risky than someone else, then take the time to pare down your debts and do some of these things that we showed you in the seminar, so that you can raise your credit score, be less risky, and then save thousands of dollars over the life of your mortgage. Because like Bob said, once you move in there, probably going to stay in there for a while. And some of the next two sessions that we plan to present to you will talk a little bit more about moving into your new home and then life as a homeowner afterwards. But we wanted to share with you some other resources that are available out there, again, to make you a smart consumer, give you some tools to work with. And again, we encourage you to go to your local credit union. With 14 credit unions in the viewing area, I'm certain that there's one that you are eligible for membership in. There's also some other websites that are available that have calculators and other tools out there that will enable you to, again, look at different scenarios, make decisions, look at budgets, rates. Some of them that we have listed are creditunion.coop. They have calculators out there. Makinghomeaffordable.gov. There's some information out there. Interesting one for credit scores is myfico.com. You can look at some other scenario-based things on what goes into your credit score. Of course, we have the FTC the FTC website. There's a plethora of information out there, and we've listed again for you the 3 credit bureaus, which you can, again, as Linda said, get your free credit report, one from each of the bureaus annually. And of course, there's HUD.gov. So we certainly hope that some of those resources will help you do your research and get some really good information on your way to buying and purchasing and getting ready to buy a home. We do want to introduce our next session, which will be Tuesday, February 26th at 7:30 p.m. Again, we're going to go more into the home buying process. We have some other credit union representatives that are going to be joining us at that time. But we do have some questions that came in the last time that we were on air. We didn't get to answer them. So I think we have probably time for at least 1 or 2 questions. You guys ready for this? Okay.
Let's go.
One of the questions, and I think this is a really good one, do all financial institutions report to all 3 credit bureaus? Linda, tell me a little bit about that.
Not necessarily. Every lender has an option of reporting to 1 or all 3 of the bureaus. Here at our credit union at CTCE, we do report to all 3, so it might be a question you might want to ask. Interesting.
Here's another one. Why is my score different from one financial institution to another? Bob? Can you answer that?
That's a good question. A lot of people will tell me they had their credit report pulls, maybe purchasing a car and they have one score and they come in for a mortgage and the score is a little bit different. The fact is that credit is constantly being updated. So on any given day, you could have a different score, and more importantly, there are different versions of that Fair Isaac or that FICO score model. So depending on what scoring they're using, when the credit report information was updated, your score can vary. But generally, they should stay pretty much in the same area.
Okay, terrific. Let's see if we have time for one or two more. Linda, if I'm late 10 days, will that be on my credit report?
If you are late 10 days, that should not reflect on your credit report. It usually does not reflect negatively on your credit report until you're 30 days or more past due.
Terrific. I think we have time for probably one more. One of the things that we were talking about earlier before we came on the show, and it did appear that someone asked the same question. If I have a paid off debt, I've paid it off, it's still showing up on my credit report. Why is that? Bob?
I hear that one a lot. People come in and they say, well, I paid that, why is it there? Well, let's keep in mind that a credit report is history. If it were to be erased, there'd be no history. So what it should do is, correctly reflect that it is now a paid account.
Well, we want to thank everyone for joining us, and we hope to see you February 26th right here on BCTV. Thank you.